Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the surprise output cut by OPEC Plus. We'll be talking about the cues for trade. We'll be talking about how the March sales have panned out for Motown as well. And we'll also be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, send them in to us on our live feed and we'll have them addressed for sure. Well, but before we do all that, let's take a look at the top headlines at this hour. Wall Street surges in a volatile session as inflation shows signs of easing. The Nasdaq closes its best quarter since December 2020, higher by over 16%. Asian markets open mixed. The SGX Nifty is indicating a higher start for the Indian market. OPEC Plus oil producers announced surprise production cuts of over 1 million barrels a day. Crude prices surge in early trade, up 5% to over $84 a barrel. Maruti's March sales beat expectations while it also logs its highest ever annual sales. Hero Motors sales beats expectations while a weakness in exports hits TVS numbers. We decode the auto sales figures and also discuss stocks like Bata India and UltraTech Cement. Well, the three-day MPC meet kicks off today against the backdrop of a banking crisis in US and Europe and some moderation in Fed's hawkishness. RBI is expected to raise rates by another 25 basis points on the 6th of April. Well, oil prices have surged. In fact, Brent is above that $84 barrel mark after surprise output cut by OPEC Plus. Now, let's go across to Peter Maguire, CEO of Exim Australia, to get a view from him on what he makes of this surprise cut by the OPEC Plus. Good morning, Peter. So good to have you on the show. Surprise cut by over 1 million barrels a day. And, this kind of throws Fed's inflation fight into a spanner, And, of course, Goldman Sachs still doesn't see $100 on oil by the end of the year. So where are you expecting the crude prices to head from here?
Well, good morning. A couple of things. I think it's taken the market hundreds of barrels traded or
Peter, there seems to be some kind of issue with your audio. We'll reconnect with you. We'll get back to you in a few minutes. There seems to be some audio issue at your end. Let's move on to Nitin then. Nitin Agrawal from MC Moneycontrol Pro joining us this morning to decode the auto sales figure for March. Good morning, Nitin. Good to have you on the show. Well, March seems to be a mixed bag when it comes to auto sales. However, Maruti and Tata Motors, all these companies seem to have clocked in a record FY23. So, when you look at two-wheelers as well, Hero Moto hasn't done all that well. So, what is your take on how the March sales have panned out for Motown?
If we talk about the March sales, the number have been very, as you rightly mentioned, as the mixed bag. Given the Hero MotoCorp has recorded around 31.7% growth on a month-on-month basis, and this growth has come after a really long period of time because of the serious weakness in the entry-level two-wheeler segment, where the Hero is majorly present. The growth came primarily on the back of the festive season and the marriage season. However, if we look at the other segments, such as the tractor segment, this is also has been struggling primarily because of the untimely rain that many parts of the country witnessed this March. So the management of our escort has indicated that this has impacted the sale. However, the outlook seems promising primarily on the back of the expectation of the normal monsoon going forward. One thing that is that one segment that is continuously doing very good is the commercial vehicle segment, which continues to do post the pandemic, when the economy started opening up, and with the government's focus towards infrastructure, construction, mining activities, this segment continues to do very well.
Right. Nitin, a lot of these automakers have also announced price hikes, the first price hike of FY24 as they grapple with cost pressures. Do you expect this price hike to, dent demand in any way going forward?
They have, however, indicated there could be price hike primarily because of the inclusion of various regulatory changes. However, the price hike won't be that much as the major impact that the commodity cost inflation is already passed and behind us. If we look at the last quarter number of various auto measures, most of the managements have indicated that the prices, the commodity cost inflation is already in the price, and there is no need to increase the price going forward, and they see it's a softening of the raw material prices. If that happens, then we may witness the prices to remain stable or go down probably. In terms of the demand, the segment which are doing well will continue to do well, such as the passenger vehicle segment, which has been doing well. If we look at the within the two-wheeler space, the premium automakers such as Eicher is witnessing a significant demand. So in terms of the demand, there won't be much of the impact. However, if the prices go down, then we may witness a significant pickup in the demand in the entry-level segment, both in the two-wheeler and the passenger vehicle segment.
Right, Nitin, in light of the sales and post the price hike, which are the auto stocks that are looking very attractive at this juncture?
In terms of my preference, I believe the two-wheeler is available at a very the Hero MotoCorp is available at a very cheap valuations. Though there is pressure and there could be pressure for another quarter or so. However, the valuation gives significant comfort, and it is being the leader in the two-wheeler space with more than 50% market share in the entry-level segment. We believe the Hero MotoCorp could be the one of these one stock that we can prefer. From the passenger vehicle segment, we prefer Maruti, as the Maruti has a strong pipeline of new products, and the consumer generally prefer the new launches and the new facelifts in their car. So hence, the Maruti could be another preference from my end.
Right, so those are the auto stocks that are the preferred picks of Moneycontrol Pro. Well, with that, Nitin, thanks a lot for taking out time and joining us this morning and decoding the auto sales figures with us. Let's go back to Peter then, who's joining in with a reaction on how crude prices have panned out after the surprise cut by OPEC. Peter, good to have you back on the show. Tell us, where do you expect crude prices to head from here, given the fact that, you know, it's a surprise move and it does throw a spanner in the works when it comes to Fed's inflation fight, and, you know, Goldman Sachs still doesn't see $100 on oil for this year. What is your take?
Well, good morning. I think a couple of things. Yes, I wouldn't be surprised to see oil edge up further from here in this quarter. There seems to be a disconnect between Washington and Riyadh. This is really fueling much angst to OPEC Plus, and we've seen that cut quite aggressively of 1 million barrels, and that in turn is going to create, I think, a lot of tension in the oil markets and naturally with the inflation story moving forward.
Right. So would you expect crude to hit $100 a barrel anytime soon in that sense?
I don't know whether it'll hit it this quarter, but I won't be surprised for it to hit it in the next quarter. Certainly by that July, August, September period, I think there's a lot of momentum to the upside. And we're only $15 out. We're currently trading at the best part of, nearly $85 a barrel of Brent and $80 for WTI. So, yes, probably very conceivable. Maybe not this quarter, but certainly in the next quarter.
Right. So oil could touch $100 a barrel by next quarter. That's the call coming in from Peter. With that, Peter, thanks a lot for taking out time this morning and joining in and sharing your thoughts on where crude is headed from here. Well, let's go on and address the market technicals and what the trade setup is looking like for this morning with Rajesh Palviya of Axis Securities. Good morning, Rajesh. Good to have you on the show. The last day of FY23 panned out pretty well for the markets. We ended above that 17,300 mark, and SGX Nifty today is hinting at a start above that 17,400 mark. So what are the levels that you will be watching out for on the Nifty as well as Bank Nifty in today's session?
Good morning, Nandita. So yes, it was lackluster month for the March series, but in the last day of March series or March month, we have seen significant buying action, and Nifty managed to give breakout of its consolidation range, which we were seeing since last couple of weeks. And now Nifty is trading above 17,200, 17,250 comfortably. So looking at the overall setup, and the call writers have covered their position for 17,200, even 17,300 strike, which clearly suggests that, if Nifty continues to hold above 17,250, then possibly Nifty can scale up further higher towards 17,400 to 17,450, which is the immediate resistance area which we can see in the Nifty. But overall structure has changed. Now, if Nifty continues to hold above 17,200, then possibly Nifty can attempt to cross even 17,500 level also. That's the positional view as of now from the current level. Even if we go with the Bank Nifty setup also, Bank Nifty now managed to give breakout over 40,500, which is very positive for the Bank Nifty, and most of the banking stocks have also recovered from their recent low, and short covering action was there in private as well as the PSU Bank also. So looking at the overall setup for Bank Nifty, we believe that if Bank Nifty continues to hold above 40,400, then possibly Bank Nifty can scale up higher towards 40,800, even 41,000 level also. So 40,800 is the key level for next 1 or 2 trading session. If we crosses those level, then one round of short covering we can expect in the Bank Nifty also. So those who are long in the Nifty as well as on the Bank Nifty, they can hold their position. For Nifty, stop loss at 17,250, and for Bank Nifty, stop loss is at now 40,400.
Right, so those are the levels to watch out for on the Nifty as well as Bank Nifty. Let's also talk about the stock of the day. For me, it is Bata India. LIC has bought additional shares, in fact, has raised stake in the counter to over 5%. Now, if you look at the stock, Rajesh, on a YTD basis, it has lost somewhere around 14%. So at a time like this, LIC raising stake, do you think that bodes well for the counter? Are we headed higher from here?
So almost it's a fourth, fifth month, consecutive month where we are seeing that lower low formation for Bata India, and looking at the overall setup, stock is now approaching towards its critical and important support area on the monthly chart, which is at around 1360. So if stock manages to hold this 1360 level, then some pullback action we can expect in the stock from the current level, as the stock is already in oversold trajectory for near term to short term setup. So 1360 is the key level on the downside. If it's hold, then some pullback action can be there. But in the pullback, again, the major resistance which we can expect in the near term, that is around 1480, even 1500. These two levels are immediate resistance for the stock. If at all stock crosses above 1500 level, then possibly stock can move further higher from the current level. But as of now, we are looking at the range of 1360 to 1480 for near-term to short-term perspective.
Right, so that's the view on Bata. Let's also talk about UltraTech Cement. FY23 production figures came in, they were up 12% to somewhere around 105 million tons. In fact, domestic sales volume has also picked up somewhere around 15% or thereabouts. And this morning we have a brokerage note coming in from Jefferies as well. It says that, all India, the dealers checks suggest that all India average price is down 2% on a month-on-month basis, and prices have slipped across regions on the back of volume push. Looking at the kind of production figures that they have handed in, looks like UltraTech Cement is poised for an upside in today's session. What would you say about that?
So very strong buying action in the previous week, almost 3% gain we have witnessed for the UltraTech Cement, and looking at the technical as well as the derivative setup, a clear long build-up is there, and on the technical front, the stock managed to view breakout of its previous swing high also. It's a third consecutive month where we are seeing, higher high formation for the stock. So overall structure for UltraTech Cement is on the bullish side. We are bullish, and we expect that, if stocks continues to hold above 7,500 level, then UltraTech can scale up further higher towards 7,750 to even 7,800 in the positional basis. So one can initiate buy on dips strategy in this stock, keep stop loss of 7,500, upside target 7,750, 7,800.
Right, so that's the call on UltraTech Cement. Let's also talk about Sriram Properties. This stock was up somewhere around 8.5% on Friday. In fact, Aurum Real Estate has bought somewhere around 14.5% stake in the company at an average price of 55 rupees a share. Two US-based private equity funds have exited this counter. In fact, we also had a query on this stock coming in from Ravinder Goswami, who wants to know the outlook on the stock after the stake by Aurum. Would you expect more up move from here, room for more upside?
So Sriram Property overall structure is weak, and stock is continuously forming lower top, lower bottom formation on the weekly as well as on the daily chart. Monthly chart is also suggesting it's a fourth consecutive month where we are seeing sustained selling pressure in the stock. Stock is trading below to all its important moving averages. So overall, this pullback should be used as an exit opportunity in the stock. The structure is overall weak for the stock. Even on the higher side, 65 to 68 are the immediate hurdle. If until the stock not crosses 68 level, sell-on rise would be the strategy. Even on the downside, if it stocks breaks again below 56 level, then it may again continue its downtrend, and possibly we can see further more lower level. So around 68, it's a immediate resistance area. So if you are already holding the position on the lower side, you can book some partial profit around 68 level.
So if you're already holding on to some, look at booking some profits in Sriram Properties. Another query is coming in from Mohit Anand Bhatia. It's a very interesting query. He's given option of 4 stocks and he wants to know which one he should buy with a 1-year time frame. And the stocks are L&T Finance, Trident, Biocon and GSFC. So which one would you advise him to buy out of these 4?
So all different sectors. I would go with GSFC. Stock has corrected significantly, but overall, if we analyze the setup, stock is now on the monthly chart. It's trying to form some base and some support buying action is coming. Since last 4 months, the stock is holding the ground at around 115, 116 level. So for 1 year perspective, we believe that GSFC can be a stock where we can see upside target of 160 to 170 on the higher side. So one can buy and accumulate this stock with stop loss of 100 rupees. If I go with another stock, that is L&T Finance, that is also looking attractive, but still we will wait for 100 rupees breakout. If it's give that breakout above 100 rupees, then we will initiate buy in this stock for upside target of 140 to 150. But in all 4 stocks, my preference choice would be GSFC.
So GSFC is the choice out of the 4 counters. Hope that answers your query. Let's also take up a query on Sonar Comstar. Srinivas has written in and he wants to know your thoughts on this counter. Now, over the last 1 month, we've lost somewhere around 10% on Sonar Comstar. And, it has come off its 52-week lows, but still quite far from its 52-week high of 700 levels or thereabouts. What would you advise investors to do with this one now?
So almost it's a 1 year stock continuously in downtrend. If we analyze on the monthly chart, stock continuously moving in low down sloping channel. And looking at the structure, we believe that until stock not crosses above 450, 460 level on monthly closing basis, it may remain in the range of 370 to 450. This could be the possible range we can expect for some more month. Either side breakout will decide the further major direction for the stock. But looking at the overall setup, if you are already bought the stock, your stop loss should be at around 370. That is the critical level for the stock on the downside. On the breakout of 450, yes, some upward momentum we can expect further higher towards 540, 560 zone. But as of now, we are seeing that it should remain in the range of 370 to 440.
All right, it will remain in the range of 370 to 440. Hope that answers your query. The next one is coming in on the PSU banking lot. Nifty PSU bank index that has gained somewhere around 30% if you look at the last fiscal. So it has done pretty well in the fiscal year gone by. Now we have a query coming in from Funny PG and he wants to know which one is a better pick for a fresh buy. Bank of Baroda, Indian Bank, Union Bank and CSB. Which one would you advise him to pick out of these 4?
So from PSU space, my preferred choice would be on SBI. But there are 4 stocks which is mentioned by the investor. So from those 4 stocks, I'd go with Bank of Baroda. We believe that Bank of Baroda overall structure is looking attractive, and if it continues to hold above 150 level on a monthly closing basis, then possibly we can expect upside target of 200 to 210 in coming months. So for positional perspective, Bank of Baroda is the looking very attractive on the technically, and as well as on the derivative data is also positive for the stock. So we will go with the Bank of Baroda for upside target of 200 to 210. One can keep a stop loss of 150 on monthly closing basis.
All right, so Bank of Baroda is Rajesh's pick when it comes to the smaller banking names. Let's also take up a query on Asian Paints. Now, this one is coming in from Konda Reddy and he wants to know your thoughts on the stock at current market price. Now, the stock has been in a downtrend, so to say, and is very close to, if I'm not mistaken, quite close to its 52-week lows as well. So how should one play Asian Paints now?
Yeah, so it's a good quality stock, and if you want to add this stock for your long-term portfolio, yes, you can add in these dips. But for trading perspective, stock structure is weak, and looking at the weekly setup, stock is moving in downsloping channel. Stock is almost trading near to its critical support area of 2690, which is the next critical support area on the downside. If stocks breaks below those level, then possibly stock may continue further more downside from the current level also. So overall structure is weak as of now, and until the stock not crosses about 2950 level, one can use, if you're a derivative trader, one can use sell on rise strategy in the stock. On the breakdown of 2690, we can see furthermore downside towards 2550 level also. So we will avoid to buy at this current level. Wait for some more corrective action, let the stock to settle and to give some signal to recover, then only initiate the buy for stock for trading perspective. The structure is weak for near term to short term.
Well, the structure looks weak in the near to short term. Let's take up a query on HUL. Vipul has written in and he wants to know whether he should look at buying into HUL at current levels. The stock hasn't done all that bad. If you look at this counter from the start of the year, it's been flattish, but still managed to, remain in the positive on a YTD basis. Would you advise investors to look at this counter now?
So we have seen some buying action in the FMCG space in last couple of trading session. HUL is also one of those stock, and now in this recovery, HUL is now penetrating to its 200-day as well as 100-day moving average in this pullback. So looking at the overall setup, we believe that this stock continues to hold about 2500 level, then some more upside we can expect towards 2630, 2640, which is the immediate near-term target for the stock. So after the corrective move, yes, stock is trying to recover from the recent swing low. And looking at the setup, we believe that one can hold with the position with stop loss of 2500. Upside target is 2630.
Right. I think we just have time for one more query, in today's show. Sachin has written in and he wants to know your thoughts on Tata Elxsi. At current levels, is it a good stock to enter? The stock is off 52-week highs, quite a bit, in fact, halved from 52-week highs and 5,900 levels. Do you think this is a good time to enter, given the fact that, it is available at quite a bit of a discount from its 52-week highs?
We have seen a significant corrective action, especially in last 6-7 months for this stock. Almost stock corrected from the 10,000 level to now it's trading at around 6,000 level. So looking at the overall setup, stock structure on the technical side is a weak, and looking at the near term as well as short term structure, we believe that until the stock not crosses above 6250, 6300 level, sell on rise would be the strategy as of now based on the technical. On the downside, if stocks breaks below 5800 level, then it may continue furthermore downtrend from the current level and possibly next target for the stock towards 5500 also. So if you're looking for buy the stock, I think you should avoid at this current juncture because still technical structure is weak. Let the stock to cross about 6250, 6300 level, then only one can initiate buy for furthermore upside from those level. So as of now, sell on rise is the structure for the stock.
Sell on rise, that's advice coming in from Rajesh. But Rajesh, I want to get in the last query for today. This one is coming in on Chemcon. And Balu Rama has written in, he has bought, in fact, he's suffering a loss of 30%, at the current juncture. And he wants to know whether he should hold it or accumulate more or sell and exit at the current juncture. What would you advise him to do?
So Chemcon, again, if we analyze the setup for the stock since last few trading sessions, some buying interest was there in the sector, but still overall structure for the stock is on the bearish side, because if we analyze the overall setup, stock continuously in downtrend. On the weekly basis, stock has given a breakdown of its multiple support area. So until the stock not crosses about 265, 270 level, the sell on rise is the structure. Overall, daily, weekly, monthly time frame clearly suggesting that stock structure is weak. So wait for stock to cross and recover about 265, then only initiate the buy. Because as of now, we feel that looking at the overall setup, stock may give further more downside move from the current level. Also, 200 could be the next target on the downside.
Right. I hope that answers your query. With that, we're completely timed out. But before I let you go, Rajesh, leave us with two stock recommendations for our viewers today.
So JK Lakshmi Cement is looking attractive. Stock has given a breakout in the previous trading session. So looking at the overall setup for JK Lakshmi, we believe that furthermore upside we can expect towards 840 to 860. One can buy and accumulate this stock with stop loss of 755. Another stock which we like that is SRF. From chemical space, we like that SRF and stock managed to view breakout of its last 7-8 days consolidation move. And looking at the breakout, we believe that SRF can scale up further higher towards 2550 to 2600. One can buy, accumulate this stock with stop loss of 2320.
Well, those are the stock recommendations from Rajesh for today. Well, with that, Rajesh, thanks a lot for taking out time and joining us this morning and answering all of your queries. Well, with that, we are completely timed out on this edition of Morning Trade. But don't go anywhere because coming up next is Opening Bell. So it's a goodbye from me and the entire team that put the show together.